Happy Monday.
I'm Anthony. Welcome to No Vacancy Live. That's my friend Glenn.
You're watching the #1 show in hospitality. Hey, everybody. Welcome to No Vacancy Live with Anthony Melchiori right over there and me, Glenn Hausman. Anthony, so great to see you. It's really weird doing a live show that's actually pre-recorded today. So I don't know. Are we doing this live? Where are we? What's happening?
Oh, we're talking finance, and this week seems to be the finance week. So we're talking finance. The most important thing on people's mind is finance. So we want to put as many shows about finance this week as possible. So because we're traveling today, which is Friday, we're taping this the day before, or maybe
That's
2 days.
Right. Or whatever. It's the day before. But the good thing is, earlier this week, we spoke to Michael Schindler of Four Corners Advisors, and we focused really on what the financial situation is for hoteliers, how they're handling it, what they're doing. But what I'm really looking forward to today, Anthony, is we're going to be learning about how to actually find funding. We understand there is funding out there. So if we're talking real estate investment 101, this is going to be a great show for people to be hearing.
Yeah, listen, it's the #1 priority right now is financial. You can talk about service and standards and cleanliness, but if you don't talk about financing, what's the point? Because right now, if people don't have financing, they don't have anything.
And I will say on November the 18th, Anthony is going to be participating in an event. Just go to cremediaevents.com. He's doing the Hospitality Finance Forum, where he's going to get even deeper into these types of issues. Not just him, but a full program. They have a whole panoply of programs throughout the entire day. So be sure to go and register to that. Right, Anthony? You want them to come and hear your session, right?
Absolutely. November 18th. I'll be talking, so you be listening. It's cremediaevents.com/register. Register now.
Right. And November 18th is a very important day. For those of you who don't know, it's the first American ever to go into space, Alan B. Shepard's birthday. And also Mickey Mouse, the first ever Mickey Mouse cartoon premiered on November 18th. How cool is that?
She's my birthday too. She's your birthday? Where's that from?
Well, November 18th is my birthday. That's why I know those stupid facts.
Which sitcom is that from? She's my birthday. She's your birthday. She's my birthday.
Yeah.
That was from my love.
Awesome.
Birthday.
Let's do it. Let's talk some financing right now. How about that? So let's bring to the show Mr. Charles Williams of Pioneer Realty Capital. Charles, welcome aboard. Thanks so much. We really appreciate you coming and being our gateway to the capital markets out there for all of our listeners.
Hey, thank you, Glenn and Anthony, for having me on your show. I'm excited. I'm looking forward to talking about different structures and financing opportunities.
And one of the things I'll ask you to do is, because we have our audience is very, very sophisticated when it comes to financing. And then there's some mid-level managers and line employees that really don't understand the financing, what is available and what all the terms mean. So when we're talking bridge loans or whatever we're talking, try to explain what that means. Like you're talking, talking to someone that maybe has a little knowledge, but not as much knowledge as maybe you and I and Glenn have. So just to keep, because this show, if it's anything, it's really a learning tool. And it's almost like, to me, it's a masterclass in hospitality and financing. So just keep that in mind.
Absolutely.
All right. So let me ask you the first question, Charles. We're in the midst of a major crisis. So I think people instinctually say, who's going to be able to invest in the hospitality industry right now? Who then, Charles, is investing in the hospitality industry right now? And if I wanted to do that, can I get money?
Absolutely. Hospitality is an asset. People look for value in assets so that they can generate a return on their investments. And so certainly, there's always an opportunity. We always hit different sides of a cycle, and there's various types of financing available depending on what part of a cycle we're in.
Yeah, because a lot of people today say there's no financing. You can't find financing. There's no money. So I'll give you an example. I have, say, a 100-room hotel. I'm on highway, I-70, and it's a branded hotel, and we're about to go into forbearance. I'm about to be in a lot of trouble. What should be my first call?
Well, your first call is to understand what your strategy is, given your current situation. So right now, it sounds like you're in a crisis mode. I don't know if the property is stabilized or not, but you're just coming out of construction. Is that correct?
No, it's basically I'm in the middle of a pandemic. There's no occupancy. There's no average rate. Nobody's coming to my market. It's not a beach community. It's not near a national park. So I'm in trouble. I just have no business. And right now, my occupancy maybe is 10%. My average rate is 30% off, and I can't even cover my expenses. And they're about to foreclose on me. They're about to bad things about to happen.
So what you're looking at, you have now your property is not stabilized because of current market conditions, right?
Correct.
So the types of financing available for a non-stabilized asset would be bridge financing. Now, people get bridge loans because they need them, not because they want them. They get them because they solve a specific problem. So understanding what your problem is and having a sound strategy for resolving the problem and getting your property back to stabilization, that's really going to be the key.
Charles, right now I'm in the pandemic. I don't know when the vaccines are happening. It may be a year or two till I get to stabilization. So your guess is good as mine. I'm praying to God that this all gets fixed in 12 to 24 months, but I have no idea. So I can't give you an answer.
Yeah, so typically the types of bridge products that are available are going to be something with a 2-year term with an extra year extension. Given that your property is not performing financially, you're going to want to build in an interest reserve. Now, depending on who your lender is, who's also at risk at this point in terms of losing the entire value of their investment, we would, if we were working with you, we would involve that lender because it's better for them to be a participant in the solution as to be someone that's just standing by. And generally, we can work out some kind of solution with them where they're happy, or they're satisfied. Maybe they're not happy. And we can bring in the appropriate financing to solve the problem. The one thing about the asset has value, and it's going to continue to have value as conditions change. So no one wants to miss out on that. So there are definitely solutions for resolving that.
Right, but since bridge loans are paid second as opposed to the initial equity, how would you work with the initial borrower to kind of work that out? Because as I understand it, bridge loans are in second position, correct?
No, we're not talking about mezzanine or a second note. We're talking about a first deed trust mortgage loan. That's a bridge loan, which is a short-term loan, generally interest only. You can generally build in an interest reserve so that you're not worried about the property generating cash flow to service the debt. Okay, so again, bridge loans are designed to solve pre-stabilization problems, and so that's why we would bring that in.
Right. That makes a whole lot of sense to me. So what types of hotels are appealing right now to the investment community?
All of them.
We work with several funds that are out there that exclusively almost invest in hotels, and everyone likes, your Marriott, your Hilton brand, your IHG flagged hotels. But generally, if you have a property that has, that's in a good market, and there are good demand drivers to support that in a normalized market, there's generally some solution that we can work out in terms of protecting the value of the asset. Lenders want to invest their money. Investors want to invest their money in assets that's going to generate value over time. And so if we can prove that based on the market and what a normal market looks like, generally they're the way to fix that problem.
So you're saying that perhaps right now, if the location is right with the right type of product, I might be able to get a new construction loan because by the time the property actually opens, the lenders are going to hedge their bets that we're going to get back to some state of normalcy in 2 years, 3 years, depending on how long the project's going to go.
In fact, there are a couple of funds that are actively pursuing that strategy. They're looking at properties that are in strong markets that have strong demand drivers that are going into construction now. There are construction loans available for hotels, but it has to be the right hotel and it has to be the right location.
Right. And I think that's one of the things that we've kind of lost sight of when we were at the top of the market. Remember, everybody, we had a 10-year up run, more than 100 straight months in a row of improving results for property. So that kind of skewed everything out there, right? So properties that might not have been financeable today were a few years ago. So you have to kind of figure out what is right, what is not right. What to you, Charles, do you think is the type of hotel the type of hotel project that you could bring to the lenders community that they'll get excited about?
So, I mean, you know, we like Hilton brand because of the reservation system, Marriott flagged hotels, IHGs, again, good strong demographics, economic drivers. Is that your question?
But how do you have an independent hotel with a strong management company? Like you have a person that's proven in the management. Say me. Say I come into an independent hotel and I'm the guy running the property for them with my team who's been in the business for 30, 40 years. Do you look at that as well?
Absolutely. You know, hotels are at the end of the day an operating business. If you have a proven operating team, management team that knows how to create results and to have a historical track record of being profitable, that we absolutely take that into consideration.
So now with facing us, we have the pandemic, we have people not doing the numbers that they were doing last year, and maybe a year or two, especially if I'm a convention hotel. Another thing that kind of falls in the way, a lot of these markets, especially A markets and the B plus markets, they're oversaturated to begin with hotel rooms. So it's going to be that much longer for these hotels that are looking for this finance to get to where they say they're going to go. How does that play into it?
Well, so we do see that there are going to be a lot of assets trading at a discount over the next 6 to 18 months. And you know, if you examine any cycle, that's always part of the cycle. You overbuild, you run up, you know, values go up too high, people are too aggressive, and then the bubble bursts. And now that creates opportunity for investors who are liquid and, you know, and they're opportunistic. They're going to go in and buy these assets. They're going to hold them. And then when the market comes back, they're going to be able to trade them at a higher value.
I feel like, Charles, it's time to pull out that old chestnut. The hotel industry isn't overdeveloped. It's under demolished, right? So that's kind of the situation that we're in right now. I do want to backtrack just a second to what
let me just address something. You made a really good point that over demolished. There are, and depending on the market, there are several hotels that are at the end of their life cycle. And that is part of the problem. And so some of those, you know, I think we're going to talk about it a little bit later, but some of these hotels are really in a good position to be repurposed.
That's right.
Depending on the market that they're in. And if you're a hotel owner, that may be something you need to start looking at is, you know, understanding the dynamics of your market and looking for ways to repurpose that asset.
And a lot of hotels are perfect for assisted living and things like that.
Absolutely.
Hold on. Let's not get into that just yet. There's one question I want to ask before we move on to that next topic. I've already heard you say here twice, Charles, Hilton, IHG, Marriott. I've heard that ad nauseum every single event that I went to. Those are the things that bankers like most. It gets them excited. It gets them confident. Anthony and I have been doing this show now for 150 episodes over the last 7 months, and we keep seeing the schism between ownership and the brands. More owners want to go towards independent properties, but the bankers keep saying flag, flag, flag. How, in your opinion, is this all going to play out, and do independent hoteliers have much more of a chance to get loans for non-branded properties going forward, or is it going to be business as usual?
Man, you're so smart.
Thank you, sir.
So here's the thing. You want to understand why the lending community favors Hilton, Marriott flagged hotels. It all has to do with the predictability of the reservations.
Right.
Okay. And so now here's an opportunity. Anytime you see a problem where there's a large section of the population, your hotel owner population, who wants to go independent, but they feel like they can't because these brands have dominated the industry, figure out why. And the reason why is because of reservation. So some smart group should come up with a way to emulate the results that the current Hilton and Marriott reservation systems have. Mm-hmm. And if you do that, that would create an opportunity for folks to go independent. And then with the predictability of the reservations and the loyalty program, that's what sells Hilton and that's what sells Marriott.
So it's not necessarily the name of the company,
correct,
but it's the heads that they could deliver for the beds.
Absolutely, and it's consistent and it's predictable.
Yeah, and they're the best at it, those brands. But I've been in positions where I've shown as an independent operator owner that a percentage, and I won't tell you what percentage, but it's a pretty big percentage of their business that they're showing that's coming through their website is actually coming through third parties and Google search optimization.
Right.
And it is not a direct link into their brand. As you go down the chain, get away from the Hiltons, you get away from the Marriotts, and you go to the other tiered brands, that percentage goes up dramatically. And so
I see it shifting, and it's shifting slowly. But, Anthony, if you came to me with an independent product, with your experience and your management, it'd be a no-brainer. But if the average hotel owner says, "Hey, I have this independent concept," and and they have these projections, but there's nothing to really support them, it's going to be hard for them to be able to get financing. They may be able to get financing, and it's going to be at a very low leverage.
Well, I may be coming to you with a project, my brother.
Okay. I love it.
That's awesome. All right, so Charles, Anthony was teasing it. You've been teasing it. One of the things that I've seen over the last 10 years or so is really the emergence of that assisting living senior community type of product that's out there. I've also seen in my neighborhood, within a 20-minute radius of driving, I've been seeing them pop up. Obviously, they make a lot of sense from an investment point of view. People are living longer. People want to have less worries about upkeeping a house, so they go to these facilities. Do you see this as a smart investment for hoteliers that are looking to change the asset classes that they're investing within?
Yeah, obviously it depends on the market, but
yes. Well, I feel like there's old people in every market, so I'm feeling pretty good about it.
people are living longer or they're dying slower, I guess.
Right, that's right. Yeah.
Well,
either way, it works out for the guy who has the real estate.
It really depends on the market, but here's one thing to consider about assisted living.
Right.
And it's very similar to hotels, and I understand why you asked the question, but assisted living is an operating business. So the success of that business or that asset is going to depend on the company's ability to operate successfully. If people don't want to come there for the services that you provide, in addition to lodging, then there's going to be a problem. So what you want to look at, is there a demand? Is there a community that will support the asset? Secondly, does the management group have the experience and expertise to respond to all types of problems that come up when you're operating an assisted living facility? Right. And then also you go through the licensing and those things. And if you can check all those boxes, then it could be a great investment. There are a couple companies that have done extremely well at converting hotels into assisted living facilities, and there are just as many that have failed miserably.
What if we take the word assisted and just turned it into senior? So now you've got a 55 plus community, but you don't have to have any medical infrastructure.
Absolutely. Much easier to finance, if that's your question.
Yes.
Looking at an investment.
I'm just trying to dress it up in fanciness.
There you go.
Charles, you obviously have all this experience. You have a successful company. What is your background? Where did you get all this experience, and how did you get started in this business?
I needed a job. Got tired of getting fired.
So tell me what happened.
I started out as an engineer. I used to work for Johnson Controls, which is a Fortune 500 company, and decided that I wanted to be in business for myself. So I started my own engineering firm, ran that a little while, but wasn't really making the kind of money I wanted to make. So I decided to go back to school, and I was able to earn a master's degree, MBA in finance and accounting, and it just really opened my eyes to the financing world. I was like, man, every small business owner should know how finance works.
Right.
And so I started a little company called Pioneer Services, and basically what we did at the time was work with small businesses to organize their financial records and put them in a position to gain access to capital. And what we found is, we had clients that had extraordinary businesses, but they didn't have enough capital to operate.
Right.
So we started helping them put together investment grade financing packages to go and secure debt and equity. And of course, this was around 2003, between 2003, 2005, and money was everywhere. It was so easy to get money back then. So we were approached by an insurance company, Principal Financial Group. They wanted to compete in the small balance space. They wanted to compete with the banks for those loans that were $1 million to $5 million. But as you know, insurance companies, they don't have loan officers. So they use third-party groups. They call them correspondent lenders to go and originate and underwrite loans for them. So we gave it a shot, and I closed the deal, and I looked at the check, and I said, you know what? I'm in a new business. I like what that looked like. So
how long ago was that?
So we decided to focus on commercial real estate from that point on.
How long ago was that?
So we started in 2003. So I guess that's we're going on 19 years now.
Wow. And now you've got over 24 billion in assets under management. Wow.
Well, we work with a lot of groups that have and so collectively that's what they have. So that's not what we have.
You know what, Charles? I just wrote the first draft of my book, and we're looking for a title. I'm putting that on the top of the list of the title. I'm in the me business.
You're
Right.
Okay.
I like that. Personal branding. I'm in the me business. I got to write that down.
There you go.
I really like that. So,
now you're Anthony Me, right? All right.
What advice do you have for somebody that wants to switch over from one career to investing like you did?
Well, I mean, you better be ready for a ride. It's not easy. Anytime you're changing, change is not easy. You're going to have challenges. I was actually telling my girlfriend the other day that if I had known what I was going to have to do to get to where I am today, I probably wouldn't have done it. So, and I think we can all say that.
I'm going to hold you accountable for that. I think that you're full of crap on that. I think you would have done it anyway, because where you are right now is you're in the meat business. You're in control of your destiny, and all that pain is worth it. And but yeah, maybe that.
No, it's worth it. It's certainly worth it. There's no argument there. It's worth it. But I think if I'd known all the challenges that you would have to overcome, it probably would have scared me. But to answer your question, the number one thing, and I do this every year, have a goal. What are you going to accomplish this year? What are you going to accomplish this month? What are you going to accomplish this week? If you have a goal, and then you set your objectives, and then you kind of outline what your tasks are, it's going to design your life. It's going to allow you every day, no matter what the circumstances are, to be productive. I remember during the financial crisis, we didn't have any business coming in, but I got up and I went to work every day as if we were closing a new transaction every week, because there were things that needed to be done despite what was happening in the market. And once the market began to change, we were in a perfect position to really just accelerate our business. And so in anything we do in life, if you have a goal, if you're productive and you're productive every day, you're gonna hit success. It's unavoidable.
So
unavoidable? I love that.
How does that attitude and what you went through during the financial crisis 10, 12 years ago inform you on how to manage your way through this even deeper crisis?
Well, there's always opportunity. And one thing that's better about this crisis is, in the previous financial crisis, there was no liquidity.
Right.
There was no money to lend. That's a real crisis, right? If you're in my business, right? Today it's the opposite. There's so much liquidity.
Right.
There's so much capital, and laws have changed to make capital more accessible. You can raise capital, and there, that 2012 Jobs Act, most small business owners are not taking advantage of it. They know nothing about it. It is the greatest financing vehicle for equity that's ever existed. And most people, most people live with their heads in the sand. They don't take advantage of things like that.
Yeah, I'd be one of them.
But yeah, I would say that that's the biggest thing.
I think fear right now is kind of the number one commodity that everybody has. Everybody seems to have a lot of fear. And when you get past the fear, which is normal, anxiety, and you realize what's there and you go after it. And I think what you said, I'm going to use in the commencement speech I'm putting together, and I'm going to put in my book. You said,
charging you.
Yeah, right?
If you do the right things every day towards your goals, success is unavoidable.
Right.
I think those are beautiful words, and I think that is so just perfectly said. You have to do it every day. Like I've been saying, it's not about the motivation. It's about being disciplined every single day. Count on your discipline, and success is unavoidable. I think that that's brilliant, and that's true to what you're doing. So what would you say to a young person getting into this business, whether it be the hotel business, the finance business? Listen, jobs are scarce. Things look scary. We don't even know who the president is, and they're graduating in January. Like my daughter's graduating in January, and she's freaking out a little bit, and it's understandable. So what would your advice be to people like that?
Yeah, so I'm a big fan of Stephen Covey, the late Stephen Covey. I don't know if you've read any of his books. One expression that he used, and if you work for our company, you've heard this 1,000 times, and it's called sharpening your saw. And what that means is the person who's prepared to go to work is the person who's going to see results and who's going to be successful. But being prepared is a personal thing. So many people today make their preparedness someone else's responsibility. Well, my teacher didn't teach me, or my father spanked me too hard. It's all kinds of excuses, right? But if a person is willing to sharpen their saw, in other words, make sure they're prepared to go to work, that's involves discipline. That's reading, studying, investigating. Knowledge is so abundant today. It's so easy to be prepared, especially when the majority of your competition is not, right? Okay. So if you're prepared and you go into the workforce, you're going to succeed. You're going to have success.
You know what's so funny is I'm writing all this down. So if you see commencement speech on my social media and it looks like you're talking, it's because you are.
Okay. Well, I tell you what, I'll send the invoice in the mail.
Yeah.
Can't you do it because it's the right thing to do? No, what you're saying is 100% true. We talk about it every day. I try to live that every day. And it's really hard to understand that as a young person is they didn't prepare you. It's not fair. And when I say that is no one cares. They don't care.
Right.
The door just opened and you're standing there and they're like, walk in. And you're like, wait a second. The door's closed.
Right.
Like there's no wait a second. It's like, yeah, I'm ready. And being prepared and sharpening your saw is great advice. Thank you very much. I think that probably helped a lot of people today.
Well,
yeah. So, Charles, any final words of advice on investing and all of that kind of stuff?
Yeah, for your hoteliers out there, definitely attend this event. We took a lot of time to assemble individuals from the capital markets who are actively lending in the market today. We took a lot of time and effort to bring these guys together to answer those questions, to talk about what type of financing is available today for hotels, what kind of alternative financing strategies exist, understanding the importance of designing the capital stack. A lot of people, they'll design everything else with regards to their hotel. When it's time to finance, they've given no consideration to their capital acquisition strategy or how to design properly that capital stack. Well, these are things that are going to be discussed with the panel discussions, with the lenders who are actively lending today for the purpose of making sure this industry is protected.
The event starts at 10 a.m. on November 18th with opening remarks by Charles. And then immediately right after that, we're going to hear about the current state of the hospitality industry from the one and only, who might that be? Oh, yeah, Anthony Melchiori. And then a great event going all the way through 5 p.m. So make sure to register again at cremediaevents.com. Anthony?
Charles, thank you. And where can people find your podcast that I'm going to be on in a few days?
Oh, the CRE Advantage, of course, right?
Correct. CRE Advantage. So I think you can find it on Apple, Spotify, and also YouTube.
Great.
And at pioneerrealtycapital.com. It's on their whole website as well. Yes. we don't want to forget that. Charles, thank you so much for being here. We will see you again on November 18th. Thank you.
My pleasure, guys. Thank you so much. Appreciate it.
Bye-bye. That was great, Anthony, because as somebody who's like still, even though I've been in this business 25 years, some of this financing stuff is mysterious to me. I feel like I'll know a lot more now.
You know what I love about him? I love the fact that his eye is on the prize. Like he is focused and determined and in a very beautiful way. And I think that is really important right now. We need leaders right now. And he's certainly a leader.
Yeah, we certainly do. And learn to be a leader by following our show every single day. You know, it's every day at noon here on LinkedIn, Facebook, YouTube, at novacancynews.com. Make sure you subscribe to our newsletter. Text the word hotel to 66866. That's hotel to 66866. I love making Anthony Dove the little 66866 dancey dance over there. And also, I want you guys to have an absolutely terrific weekend. Anthony, next week we're going to Washington, D.C.
I am going to Washington with my friend Glenn and my friend David.
Yeah, that's going to be great. But Anthony, on Thursdays, you also do hospitality success. I assume you're still going to do that one next week when we're in DC. Right?
I will. Yeah, apparently the next 2 weeks, I really got to look at my schedule because I'm really busy and I'm starting to realize there's a lot of things troubled up on my schedule. We went from, working our shorts to hit the road. So hospitality success, Thursdays, 3 p.m. I talk about behind the scenes of Hotel Impossible and my thought process. So be there or be square.
Right. And coming soon, the project that I've been working on, the adapters. We'll hear more about that soon enough. I want to thank you guys for being here.
What project? What project?
The book and multimedia project I'm co-authoring for Sean Worker, our friend over at T5 Strategies.
I can't wait. And also, my book will be coming out hopefully in the first quarter of next year, and I'm really excited about it.
This is going to be great. So everybody out there, get ready for a lot of book pimping out there. So thanks so much. Thanks so much, guys. We really appreciate your loyalty every day. Remember, you can make it happen. You've only got one life, so blaze on and
be kind to yourself.